Hey guys, welcome to a very special Principal Profit Trader episode. We have a special guest on today from across the seas. It's pretty late over there, so we appreciate them for coming out at this hour. Um, Ibrahim, thank you for coming out, man. How are you?
Thank you, Mr. Matthew. It's a really pleasure to have me in your room, and thank you for this opportunity. And I hope I can make a little difference, and maybe I will give all my information and insight and the forecast in this room.
Excellent. Yeah, we talked a little bit prior, but for the people that are on and the people that will be listening on the replay, what's a little bit about your background? I know you said you've been trading for over 10 years, but you also have a fundamental background in economics, and maybe want to give a little background in that.
So my journey starts from like 12, 30 years. First, I studied the field of economics, uh, accounting for like 10 years. I studied economics for more than 10 years. Every year I studied economics until I finished my master degree. At this level, I was fascinated by stock market and the forex market especially. So I decided to make it professional. Then I studied technical analysis, the basic technical analysis. It was John Murphy theories. Then I started to imply this to the market. Of course, I lost my money for the for the first 3 years trading the market. I was only losing money, losing money, losing money, and learning from this loss. Then I discovered this the market is like three-dimensional market. You need to see it in a fundamental ways, in technical ways, and also in quantitative ways with pure mathematics and statistics. So I was like learning uh, things here. I was working for different brokers in forex market, so I have inside look for how brokers work, how the system, how to uh, uh, work with retail traders and investors. Then I first developed our first algorithm. It was purely quantitative, not including any indicators, not fundamental. Then I started the journey for managing other people money and reached to working with like four different hedge funds, managing over $2 million in some days. And then we started to make a very valuable partnership with my partner, Mr. Eno, to make our institution and professional way of trading and learning people and help other people how to make money and how to manage risk. So here we are, and also I'm give live analysis in CNBC Arabia for the past 5 years. Every 2 weeks, I will be on air. So this all this experience working in this professional level give me the edge to develop many trading strategies. Also working as a programmer, I was exposed to other trading strategies. Uh, and learning from them. So we just met you, Mr. Matthew, for like the past 6 years, and from my experience, I can tell that you are a very professional trader and you make your own profit. I have been following you for the past 6 or more months, and I'm really happy to work with you in this room and with Mr. Eno and with all in this room. Thank you.
Yeah, we're happy to have you on here and appreciate you in the room. And many roads lead to Rome, so there's going to be different strategies with different edges. I mean, prior to us coming on here today, you had shown me an algo uh, passive income bot. Now, I talked to my guys in the room about the bot that I use, but I manually input that data in, and then I'm in charge of it. It does a lot of automated things and it makes my life a lot easier. But at the end of the day, there's a human programmer. Now, it'd be nice if they could kind of input, my system and my consciousness over the bot to take out the human emotion, and it would actually maybe be better as an executioner than a human. But from my experience and from what I worked with my past partner, it was very difficult for us to engineer this. But you've said in the last 6 months you've had this in a test phase, and it's produced about 6% per month in profits, which is very impressive in passive income. It's very impressive. Did I quote that accurately about the time frame and the percentage
Yes,
P&L?
yes,
Yeah.
yes, true.
And what
Uh,
asset class is it trading right now, or more than one?
yes, it was trading gold, mainly gold. And this is, let me talk about this strategy. It's a pure mathematical and probability, and it's not giving any important and about the direction of the market. It's like hedging. It's pure hedging. Position sizing. The game is the equation. It's how to calculate the position size to open, buy
So
or sell.
is it a shorter time frame strategy? Are you going in and out every day? Is it a swing trade? Is it longer term? Is it a little bit of both? All of it, or what would you say the strategy is overall?
Yes, I think you can call it scalping. So it's maybe in one day you can make around 5 to 10 trades in a normal day on average. Uh, and it's need to be like it's use also advanced techniques in risk management like trailing stop techniques, also limiting the risk. And here's the thing: this strategy can work, as I was talking, in any volatile market, in any range, and any trending markets, like gold, Bitcoin, maybe S&P 500. All these bears will be good with this strategy.
Hmm.
Not the ranging pairs like AUD maybe other forex, they are ranging in the same same price area. So also we can control the risk. Here we can control everything from the drawdown to maybe. And one thing I was learning, working both in retail and institutional investors, that retail traders are looking for profits, but institutional traders and investors are looking for risk. The most important thing is risk, like
Well
50%,
said. Yeah.
like 50% maximum drawdown. This is the limit. So let's make a simulation for the last 8 months from the start of 2000 to 25 on the gold with the capital 100K USD with the maximum drawdown 50%. So all this is like a graph for the performance of the algo. And let me tell you something very important about the back testing and how the back testing is not representing the forward testing. Okay. In
Okay. So
any
so this is forward testing. This is live now.
no
You're not
no
going.
No, no, this is what you are seeing now is a backtest, and I also
Right.
have
Okay.
other accounts in my FX books and other uh, tracking website like FX Blue professional website. They are tracking the live account. So I have a backtest and a forward test, live and demo. But my point is, there is always say that in any development, there is the best performance is not the guarantee or represent the future performance. Okay, this code can be very accurate, 100% accurate in indicator generated traits like moving average, crossover, RSI, overbought, oversell, or stochastic maybe. If you develop a trading strategy based on indicators, uh, so the back test is not representing the forward test. But in quantitative techniques and in quantitative strategy, you are like testing for your equation, not for the market itself. So in this, so this is only equation. It will happen in any time, in any invest in the future.
Mhm.
And if it's like principle, and it will happen every time. You only have to solve the formula. Okay, if you solve it, this formula can work at any condition. So, and this is what we are talking about. It's not just a backtest. I can show you now the profit of.
Did you have the hit rate for? Oh, you had the hit rate on the previous page too on your back
This is
test.
yes, this is the statistics, the statistics on this.
Mhm.
Uh, like 3,000 net profit was with the relatively so we are capped the drawdown here to maximum to 50%. 50%.
Mhm.
Okay, so the max drawdown happened here
Mhm.
50%. And also net profit was 3,000, so like 3%. Uh, these all the factors with the trade factors and all this stuff.
What time period was that?
Actually, time period is not important because we are dealing with a probability and a price target and a price. So we tell the algo if the price go up for X amount of bips,
Mhm.
do this. If continue, do this. If retreat and recover, do this. So you are building all the scenarios based on the movement of the price. It doesn't matter and H1 or any minute. It will work at any time. Okay.
So, and this even
Hmm?
consists of a black swan, right?
Yes,
You
something
had a black
called
swan, Donald Trump and his tariffs, I think that must be there.
yes.
Yeah.
So
But I
let's
know a lot of
make
people who got out, but your system recovered very nicely. That's what matters in the long run. Yeah.
it. So the lost is it's common in here, but so let me continue for professional and high wealth investors. They are risk aware. So in my trading can put like 10K thousand account and make the drawdown to 100%, so you can use this or maybe on 1,000 account or 100 account or $100 account. So you can work with like a lot of ways with probability and uh, probability tree. If you know the probability tree, if you have 100 accounts, you would run the algo with a like probability of 51% to achieve it to 200 and 48, 49% chance to blow it up. Okay, so if you make it to 200, you will split two accounts, one running the algorithm and the other running the same algorithm. You have now two or more choices. You can win two accounts, can lose one account and win two accounts. Okay, this is way of managing the capital itself. Okay, can work very well with this algorithm. Okay.
When you have it set at 15%, that's the total amount of drawdown that you're allowing overall.
No,
That's not the amount that you allow per trade, correct?
no, this is the maximum equity drawdown happened or
Nice.
can occur.
Yeah, so it's pretty smooth equity curves. So all this, all your experience over the last decade, your own trades, your own systems, you decided that to execute it yourself would be more it's time, it's energy. You're in front of the screen, your adrenaline goes up. You're not outside when you do it, but when you make it, when you go half off and you set your targets, you can then go outside and do things. But you found that your system basically has been better to be able to execute like basically automatically. Now, how how did you automate this? Did you hire someone? Because we were hiring an engineer to do this. Do you have a computer programming background? How are you able to?
Yes, this is was the most challenging thing that I have ever done in my life. Okay, to learn this trading, coding, trading like programming language in QL4, in QL5, Python, C plus. I learned all these four uh, programming language from YouTube. Okay, self-study. And
That's impressive.
from this, yes, I was like I remember 6 months every day. You spend like 2 hours pausing the videos, try to mimic what he was doing, copy his code, and try to learn. So 6 months is to so I can write my first code. So I code for myself. I also code for other people. I have all of people know me from social media and tell me, "Hello, Mr. Ibrahim, we have a great strategy. We want you to program it." So we work with this and also learn their strategy. And this is like very profitable thing. You can learn, can code for yourself. You can learn other strategies from other smart people in the market. So this is the way I do it.
Nice. Now, when you also said so. Besides all the trading you do, you are um, sort of an analyst for CNBC. So you also have like the public persona. You're in front of the camera. How much of this do you, because for thanks for sharing that video, but a lot of us in PPT are English speakers. How much of what you're discussing is just pure fundamentals, or do you actually go into some trading
Mm,
strategies with your audience there? Because I know, like, most mainstream audience members aren't as sophisticated as us in this room here. So when it
no,
comes to trading, yeah.
yes, in CNBC, I just talked about the fundamentals, the news, and my prediction in Asia market. I am a specialist in Asia market. So I analyze China, Japan, no India, all news about Indian East market. I analyze it. Only
Do you
fundamental.
do you have any basically just to get a different perspective on the overall crypto market? Do you or your system have any ideas on where you think the fourth quarter might go in terms of an alt season? Do you see that happening? History repeating itself with Ethereum and then some of the more mid caps making a run, or is this a situation where you think that a lot of these companies are going to get phased out, a la the dot-com bubble?
Actually, the crypto hype and the crypto revolution is not just a hype. It's not a hype. It's a technology and a revolution. I'm a strong believer in crypto, but I'm afraid of crypto because it's move a lot. For me, it's not capable of trading because here in the MetaTrader 4 and most of the brokers offers a lower leverage and a higher margin to trade Bitcoin or Ethereum. So with this money, I can trade gold, I can trade like other instrument, but cryptocurrencies are for investment. Can buy now and sell it in another the next year. All this stuff for me. But I sure there is other traders and people they are making very good profit trading the cryptocurrency, and you are one of them. I followed all your uh, analysis, and I'm thinking actually to trade it live, take your signals. So it's really fascinating what you are doing.
Yeah, thank you very much. And I believe you also said that your country of Egypt isn't really that friendly towards cryptocurrency yet. Is that accurate?
Yes, yes.
Yeah. But the
Our
people are though, right? The people of Egypt like the cryptos. It's kind of like the Chinese government hated crypto, but the Chinese people loved crypto. Is that how Egypt is?
No, actually, frankly, Egypt is not like other countries. The mainstream thinking is not towards like crypto or something like this. So the few people here believe, very few people here believe and understand this crypto hype.
Mhm.
Also, the regulators not forbid, but it's not regulated. So crypto in Egypt is not regulated yet. It's not crime, but it's not regulated. But mining is crime here. You know, mining crypto is not allowed. Marketing for crypto or buying or selling is not here because here in Egypt, in the past couple of years, we have a different economic situation. We have rules to enhance overall the economic uh, health, and this is happened. And if you see our debt and our inflation and our uh, currency value over the past 5 years, you will see the increase the value. And I think economics here in Egypt are started to go right. Okay, because also we have like black market, the black market happening in Argentina and happening in another developing countries around the world, and it was the main cause of the big inflation. If you studied the case of Argentina and Venezuela, it's a very high inflation. You will find the reason was the black market. People are buying the crypto or buying the dollar and resell it with a higher price. Okay, so all this regulation in Egypt to the aim was to control and shut down the.
Hmm. Yep. And so you've automated a lot of your income producing trades, or you plan on eventually automating more of it as you develop this system. What other aspects of how you see the markets from a fundamental point of view affect your like longer term investments?
Mm. I have like opinion in this, maybe a strange opinion. I have a program in YouTube for for episode discussing this economic that we are living in. Where our economics, let's start by saying economics is a social science, not a natural science like physics. What is the difference between social science and natural science? Natural science like physics, like math, is something is already there. People observe the nature, observe the moving things, and try to simplify it to equations. But economics is social science made by people to manage other people. Who made the economics science? People like Adam Smith, the godfather of the economics. Other people trying to improve, and the Federal Reserve of America is the godfather of the capitalism now. He puts like a very strange aspect to control the money. There is a book in the Federal Reserve called a money making mechanism. Money making mechanism or money mechanism is like a Bible for the capitalism. Okay, in this uh, book, uh, they describe in detail how the banks can make money out of the thin air. You don't have like a gold reserve or produce a valuable product to actually have money. No, you can make it by loan. You can increase your inflation, sorry, the rate of your the rate, okay, of the loan itself. All of this money comes from thin air. So we, people on Earth, working with this style of economics for the past 100 years. Okay, before crypto come and changed everything. Now, cryptocurrencies and Web3 and blockchain technology itself, um, it will change everything about this banking system. This is why they are afraid of. Okay, you can't print Bitcoin, you can't print Ethereum. You have like gold. Actually, it's like gold. Oh, if you have gold, you have money. If you don't have, you can't print money. Okay. So my view for the future of this will be uh, we are going to go to a better economic cycle, better economic understanding, and with cryptocurrency we can make the have the same rights, have uh, all the resources, and there is also one myth in the economics says we have limited resources. No, no. On Earth, we have infinite resources in terms of power, in terms of electricity, in terms of food, in terms of everything. We have a lot and more than enough to feed all people on the planet. But the system dictates that there is one percent controlling the other. All of this will go away with the decentralized market like Bitcoin and other cryptocurrency. And I think we are going to uh, oblivious or a land of like heaven in the future. So economics as we know it, capitalism will vanish, uh, and we will replace it by a better economic terms uh, based on blockchain. This is my forecast for the future, for a long future, 50
Well,
years, maybe.
I like the sound of a heaven on earth future. That would be really awesome. You know, it's we're in a situation where a lot of the speculative markets that we're in unfortunately need interest rate cuts to just basically flood the money supply and lower the cost of money so people can then buy things and everything turns happy again. And then that extra money that they print out maybe won't all go to their friends, but maybe some of it will end up in cryptocurrencies and we'll get a boost in wealth here. But, you know, of course, every time they do open the floodgates, I always think about all the people that, you know, not everyone has assets. Not everyone has, the stock market, the gold, the 401k, the house. I mean, if you have those things, you like what the New World Order does. You're like, yeah, I don't mind it. Everything that I own is going up, Bill. But
Yeah.
if you don't have those things and you just earn an income and you're just an average person who's just trying to live paycheck to paycheck, you really feel the cost of this good supply. So I always feel both happy from, on one hand, because I've been holding and investing for years, but on the other hand, I feel bad for everybody else. So
Mm.
it's one of those things. So you sort of reconciled all your different probabilities, and I was looking at your hit rate over 1,000 trades. That was pretty high. What's your risk reward ratio? Does it say?
The risk reward ratio, it's I think this will this the answer for this question will be more important if the system is not hedging or position sizing.
Mhm.
Okay, I will try to uh, describe the main logic of the trade, and you will find it's not about the hit ratio or the how many trades are win or how many trades are lost, because there is a very important aspect. It's the position size itself. So if you lose 10, 10 trades with one micro and win a one trade with uh, half lot, so you still making dollars and your win ratio is very low. So in the system we are making hedging, making be prepared for any scenario. We are the first assume and the first hypothesis of the strategy is the market is total random. There is a 50 chance the price will go up and 50 chance the price will go
Yeah,
down.
it's true. That is the truth. That
So
especially over an individual trade or a short sample size, there's a lot of luck involved. I mean, you can even just think of the luck factor in a coin flip with a very sturdy 50% hit rate. You might get unlucky over 10 flips and, flip tails when you were betting heads. And you might get 10 tails or 8, 9 tails in a row. That's pretty unlucky. You could also get lucky and get the opposite. But if you took that same strategy of a 50% hit rate and you extrapolated it out over 500 to 1,000 trades, you would be way closer to 50% as a central tendency. So that's when the law of large numbers really comes into play. But the trick is like, once again, you have to think about, like you said, your position sizing and your risk first, like the professionals do. Because I don't care how good of a trader your strategy is, if you have an incorrect position sizing on one outlier day, you can blow your whole edge and your whole strategy. So
yeah,
that's why position sizing, risk management it has to be their number one, even in a winning strategy.
yes. Yeah, sure. Did you hear about the book called The Market Wizard of Wall Street for Jack Schwager? This is a must-read book in all finance. It's a book, an interview with the top 100 traders, different traders from the world. The writer of the book made the 100 interview with the top 100 traders and hedge fund traders in the world, and he was asking them questions, answer, in the book. This is like a must-read book, and all of them have the common things. They don't forecast the move of the market. No, they all rely on the position sizing, how the position size with derivatives, mathematics, and quantitative analysis. Maybe this is one technique. Another technique is pattern recognition. I believe there is a pattern in the market. And I'm a strong believer. There is a pattern of the candles. There is a pattern of the market. It's not only the market. There is a pattern in every living thing, in spread disease, the disease when it's spread and the number of the casualties. Okay, cycles everywhere. We have a 24-day cycle of the moon and of the sun. We have a 30-day cycle of the sun and 356 days around the. We all going on cycles, including the market, because the market is the the average of all greed and all fear of the planet. Okay, so market is the life. The life price is it's like a life creature. It's a collective consciousness of all people trading this market. So there is also another technique to advanced technique to spot the new patterns. We use Python for pattern recognition, the other programming language, and you can connect this pattern to this engine, Python engine, to the platform. There is the third thing in the market. We first talked about the mathematical equations and eliminating the direction. The second, there is a pattern. Third, there is a machine learning and AI. Okay, machine learning and AI now can predict things on test performance, can change the way they predict things. This is the most important. They adapt to the change. So these three ways, I believe, they are making a good profit and proven profit. If you look search about the top uh, hedge funds in the world, there is like a hedge fund called Millennium. Millennium is making a lot of money. They are using these techniques, AI, machine learning, pattern recognition, but not the pattern that we are all know, like wedge or flag. There is like patterns contain of 5 or 6 candles repeat itself. You know?
Guys, we just want to open the floor up right now. If anyone has any questions for Ibrahim, now is the time. Um, I guess I'll just start off with one. I mean, do you also trade a live account uh, actively yourself in tandem with this, or are you
Mhm.
100% focused on basically automating all aspects of your trading?
No, no, we have many trading live accounts. They are performing well in the best years. You know, I have accounts for like 2 years, and also changing from account to another, and this is like a cycle for investors.
Okay, all right, so you don't, so you're not in a situation where you're so sold on automated bot trading where you don't do any active trading yourself. You think this is something that can be used in conjunction with trading actively?
Sorry, can you please clarify more? I
Do
don't
you
understand.
think that using the bot is something that can be used in conjunction with an active trading account? You know, assuming if the person is performing in profits per month. Obviously, if you're not profitable, then stop trading. And figure that out first.
Mm-hmm, yes, I prefer the robot. I must work individually without any human intervenence, with no manual trades, with like we can only just modify or enhance it, and there is a lot of topics you can enhance it. You can enhance the first order trigger, like started to develop pivot points. They are give you a sense of the direction. You can uh, make a better entries, but in the long run, there is you should uh, bring
Yeah, pivots tend to line up pretty well with the key reference area way of drawing support and resistance that I teach, which is a manual way, but you know, uh, large moves will show up. Market structure is market structure, and inside within the market structure is all that human behavior. And yeah, I also am a firm believer in pattern recognition because, you know, future behavior is influenced by previous market behavior 100%. So just when you think like it won't turn or there'll never be another phase of the market, it'll be sideways to down forever. That's when, you know, uh, something great will happen. But it's just a
Okay,
matter of
here
patience to get
to
there.
to to clarify this chart, you see this colorful moving uh, horizontal lines. They are a modified pivot points. You know, pivot points is the highest of the period and the lowest and the close price. I replaced it divided by 3. I replaced the closing price by the current price. So it's a dynamic pivot point, changed, changing every price movement because the equation will change, and I can customize the four uh, the four time frames of these four pivot points. Uh, and I think this is a good filtering ways to filter the buy or sell first trade. Um, so I think this is like if you see the curve, it's like safer, you know, it's like lower in drawdown now for the same period. And I think uh, institutional investors like this so much. They
Yeah,
don't
they
look.
like smooth equity curves.
Yes, yes. They don't look. They usually look for 3-4% profit for the month. The maximum drawdown
Yep.
15%.
Hmm.
So I can customize this strategy at a lot of pairs. Also, this strategy works very good with sterling, GBP, USD. You know.
Hmm. So besides the bot that we've looked at a lot of the variables that and some of these variables, like I said, same thing with my system. Some of them are unique that we've developed, but that's also like the Sharpe ratio. That's something that is a university topic with those Nobel laureates allegedly with the Sharpe ratio in the late '90s. They based their fund entirely on Sharpe ratios, and then they actually went belly up because that's why you have a lot of probabilities in your scale, because if you just use one thing, then it becomes good for a while, but then you have that black swan that your system doesn't account for, and it's like, well, there's a standard deviation, a couple from the norm that you didn't account for, and now you're screwed. So even really smart guys can screw up a fund. I forget what that fund was in the late '90s, the Sharpe ratio fund, but anyway, they were Nobel laureates and they still went belly up, so it can
Mhm.
happen.
Yeah. So talking about trading is never ending, and really enjoying this room, Mr. Murphy. Thank you for this opportunity, really.
Well, thank you very much for coming on out. I know it's late over there, so we don't want to take any more of your time. Guys, Ibrahim's wrapped up. We really appreciate it. We're going to be in touch with him to just see how his bot's doing it in the next few months here. And if you guys want to be in touch with them, how could they stay in touch with you, Ibrahim?
They can contact you, and you directly contact
Okay,
me. Or okay,
perfect.
so I'm available every time in my passion trading, and we can like make any. I am here to help you understanding or maybe at any help.
Yeah,
Thank
and I mean it's always good to get different perspectives because the perspective that I've synthesized into this system is it comes from a lot of different minds and teachers and things into one thing because markets are so complex. I wish it was just one moving average or one stochastic or just CCIs, but
you.
it seems to be you need a diverse set of tools in a probability calculation scale to come up with a trade plan that accounts for a lot of different facets of the market so you can have a holistic approach. But at the same time, you don't want to have so many tools for the sake of having tools that you have like 10 things for the same category and all of a sudden you have 100 checklists to go through, so that's why I like what I saw in the way that you viewed the market. There was a good amount of tools, but you didn't need 100 to 1,000 where it would be almost impossible for a human being to really come up with a decision, at least if they had to
Yes,
do it manually. So I
the,
mean
the,
that's what we're trying to do at the end of the day is make decisions in uncertain environments. So every principle that I teach that or Abraham shared here that we teach is something so that we can make a decision. And I've never met everybody that I know that is I followed on YouTube that would be considered a fraud or a guru never talks in terms of the risk first. And every professional that I've ever spoken to or read a book from always talks about the risk management first. And that's the just different mindset between a professional and an amateur or a scam artist. Because, I mean, even when Kobe was working with us, he's like, Matthew, would you mind just not calling the RR ratio reward to risk? But would you mind telling everyone it's risk to reward? Because you still want, even in the language of how he spoke, to NLP it into him, he wanted to think about the risk first, guys. And that's why I developed that acronym STEP, STEP. It forces you to think about your step first, stop, find your stop, then your target. What do you think you can get out of it? When you find your stop and your target first, when the trade's invalidated, then you can get your entry, that's the E, and then you can P, pull the trigger. You know, all different ways to do this. But anyway, guys, thank you guys for coming on out. Oh, we have one question here from Eno. I'm sorry to keep you, Ibrahim, if you don't mind one more second. It says, do you trade a singular system or a set of subsystems?
For now, I trade the same system with different settings. I consider it more than one system. I have a dynamic break size. I have
You're breaking up a tiny bit there. I'm sorry.
So you asked me if I have one system trading or multiple systems, right? So
yeah, the idea is this. I have a lot of institutional clients, right, and some traders, and I know your systems very well, and I really like them. What I love to do is to have, and a lot of trading teams do this. They have portfolios of trading systems. So when you see like these drawdowns that you see sometimes on the chart in real life, or if you have like 20 different systems that you have in a nice portfolio, it doesn't matter as much as if you put all your money into one system. So usually the institutional players, they have like 20, 30 systems that they trade simultaneously, and they get a much smoother equity curve. So when you are looking at this system here, of course, it looks a bit raw. It has a couple of drawdowns, but on the other hand, when you combine it in a set of systems, it runs very smoothly. And that's the beauty about this systematic trading over discretionary trading. It smooths out the equity curve by enabling you to employ all these different trading styles that you could impossibly manage if you do it discretionary. Whilst discretionary takes a lot of experience and is of course an art form by itself. It's a beauty. I really appreciate what Matt is doing here with this discretionary trading, and that's why it's so difficult also to put such a good discretionary trader into a code, because a lot of it is based on experience and a little bit of an idea of how the market will behave. It's almost like a hunch, like a seven to enter a position or not to enter a position, even though the trading code might tell you to enter. If you are, let's say, 2 minutes before news and the code doesn't have that implemented, you're probably not going to enter that position. So that's why I'm asking how this is traded. And I mean, by itself, it's a very nice system. There's no question about it.
this is very important information, Mr. Eno. Thank you.
Yeah, I mean, it's a lot of good points there, guys, because when these institutions have, we think that their advantage is maybe some secrets or something that we don't have, but really what they're doing is they have a lot of smart people and a lot of smart systems that they're running in parallel, just like Eno was talking about, because they have the manpower and the institution capitalization to do this. So what do they do when they have, like, that one trader on Wall Street who was just on that social media, went viral? He's that billionaire trader. He does $1 billion position size every day when he day trades. He was pretty boastful about it. I mean, he was interviewed by that social media star iShowSpeed, just walking around Wall Street. And I guess I bring him up because it's like the confidence to do that with his discretionary ability, he's been doing it for so long, is because he has the ability to basically run many probability weights simultaneously to get the best odds, rather than have a confirmation bias or a blue car syndrome like an individual novelty trader that doesn't have the experience, where they get zeroed in on one facet of the game. So interesting conversations and things to think about for sure. Behind how can we mirror institutions and think like them? We want to be on the same side as the institutions, because the institutions move the market. So that's where we are, guys. So Ibrahim, thank you once again for coming out and letting us know about how you view the market. Many roads lead to Rome. Your systematic way of trading, and also bringing in the fundamental background as well, so you can get a holistic approach. And yeah, guys, kind of the day that I kind of described today was sort of a day where not a lot of edge. That's why we got the trade yesterday at the main zone, and now we just have a runner in to see what happens. Now, the more this matures, there'll probably be some setups coming in the week, but for now, patience pays, not trading is trading, and we'll see you guys in the room. Thanks again, guys. Take care.
Okay, thank you. Bye bye.
Bye now.